Good morning, mother lovers, and we have to talk about the Credit Suisse bailout. So, after we saw the American version of the not bailout, this time it's Europe's turn to bail out a failing bank without having to call it a bailout. So, we're talking about Credit Suisse. So, is the Credit Suisse crisis now over? Let's talk about it. Now, look, truth be told, Credit Suisse was a bad bank for years. Every Swiss friend I have hates that bank like it was Darth Vader from Star Wars. And some of them actually work for Credit Suisse. So you can make up your own mind and conclusions about this bank. But here's a quick executive summary of their shenanigans recently. Working with the Nigerian dictator, check. Laundering money for the Yakuza, check. Helping Iranians breach financial sanctions, check. Participating in a tax evasion scheme in Germany, check. And another little tax evasion scheme in the US, check. And just 3 years later, another one in Italy, just 2 years after that. And then they got fined for money laundering in the US, and Singapore got into another tax evasion scheme in Europe, forged client signatures to take their money and bet it on stocks without clients' knowledge. Shout out to Sam Bankman-Fried. Then they got into a quick corruption scheme in Hong Kong, a bit of corporate espionage after that, some small drug trafficking adventure in Bulgaria, and of course they lost their $5.5 billion in the Archegos Capital scandal in 2021, and eventually losing $7.3 billion in 2022, which is pretty much everything they made for a decade. So you must be wondering, how are they still around? I have no idea, don't look at me. So after the latest scandal, which included their own auditors, PwC, PricewaterhouseCoopers, basically saying their financials are dog shit and they can't be trusted. It's great when your auditor says it about you as a public company, as a bank. After their biggest investors, Harris, sell out of the stock completely, after the second biggest investor, who's now the biggest investor, says he isn't putting a single dollar to help these guys, and after outflows of $100 billion in 3 months, along with an annual loss of $7.3 billion in 2022, which evaporated the profits of the bank in the prior 10 years. Then we got this. Yesterday, we saw Credit Suisse ready to come apart at the seams like a cheap cushion. But like always, these mother lovers, somehow they made it out alive again. This morning, the Swiss National Bank said it would provide a 50 billion franc loan to Credit Suisse to save their ass from going under. Now, the Saudi National Bank, that same largest shareholder that said yesterday they aren't spending a single dollar to save Credit Suisse, is now saying that there's nothing to panic about, which is what always relaxes people, right? Nothing more relaxing than hearing someone scream, "Don't panic!" On top of that, the Swiss National Bank and the Swiss equivalent of the SEC made sure to put out a press release to assure that Credit Suisse had no trouble to meet capital requirements and that the US banking crisis does not pose a risk of contagion to any Swiss banks at all. That actually made me more nervous, since it's like your kid coming up to you and saying, "Hey, Dad, I didn't steal the chocolate from the pantry earlier." I mean, come on, dude. Now, in all seriousness, this is actually very similar to what the US did with First Republic Bank by providing it with a $70 billion credit facility to prevent it from collapsing, essentially holding it on life support so we don't have another SVB and Signature Bank. So the question is, how much did this 50 billion bought for Credit Suisse? Well, is this going to be a band-aid, or this will actually help Credit Suisse to get its act together? Now, to be fair, the last time the Swiss government did this was in 2008, and it worked. They gave $60 billion to UBS. And in that case, UBS got their shit together. But then again, as you understand from the opener to this video, Credit Suisse is not UBS. So the truly scary part here is that as the Credit Suisse crisis was playing out, Jim Cramer apparently was on TV playing with his little buttons saying that the next week is going to be fantastic for your portfolio, which means we're all pretty much screwed. And talking about dysfunction, as this was happening, Cathie Wood came back from the freezer apparently. As people were taking money from regional banks, her fund actually got a piece of it. She got $397 million in money going in ARC, which is the biggest one-day inflow she saw in 2 years. So what's going on here? Well, look, here's the reality of it. Here's the executive summary. A bank that lost 143 million last year, which is its biggest loss in history, which is the Swiss National Bank, is rescuing a bank that lost 7 billion last year, which is everything it made in the past 10 years, which is Credit Suisse. Talk about the blind leading the blind. But I do have to give credit to the Europeans on how they handle this situation. When you think about it, this is how a bank run should be handled. I'm not even joking, right? No post-collapse bailouts. Give these mother lovers a loan so they can regain liquidity and stabilize the markets and the fear within 24 hours. And look, I get it. Free markets should decide the fate of failing companies, and with banks, it's not like that. It's different. Banks actually fill a very important role in any freaking society and an economy. We can't just let them collapse like it was just another company, especially when they have $600 billion of deposits. You can't let it fucking evaporate. That would have been the worst of all options, to be honest. Now, as much as I hate bankers, and I do, the reality is that banks provide a critical function in the economy. And I'm not saying that this was a good thing to bail out another bank. It's simply the somewhat less worse option of them all, given the circumstance. Now, the question is, what's next? Now, you just gave $50 billion to Credit Suisse, which was criminally mismanaged for 20 years, and did every single mistake in the book, including writing some new books about how to make mistakes. So unless the Swiss government cleans house inside that bank through possibly a sale of Credit Suisse to, say, UBS, unfortunately, in all likelihood, Credit Suisse will probably piss away this $50 billion in like 5 years. So more long-term solutions would have to be employed here, because otherwise Credit Suisse is going to fuck it up like they always do. Not sure how excited UBS is to buy this dumpster fire of a bank, but with some support and guarantees from the government, maybe this can happen and actually save their ass. So how does this impact the US banking sector? Well, look, the US regulators have done a decent job at calming the fear, right? They've solved the problem with depositors, they let First Republic have a credit line, and it seems that things have died down. Having another bank collapse in Europe would not have helped. Having the other bank get a credit facility for 50 billion francs from their own kind of central bank, that seems to kind of calm things down. I don't think there's a big banking collapse happening in the US. I think people who are talking about it don't understand how idiosyncratic these things are. They're very isolated cases. SVB and Credit Suisse were just really good examples of horrible management. I still think that the US should go back and focus on the really big problem here, which is inflation. We're still at 6%, 3 times the norm. That is the biggest problem. That is the biggest concern. I think this whole banking crisis stuff is starting to die down, and hopefully we get to go back and focus on inflation very soon. Before you guys leave, don't forget to check out Stock MVP, stock-mvp.com. You can actually check and research stocks. You can do a proper DCF calculation on the platform. We have a stock screener, also a way to evaluate price targets 5 years going forward. We have insider selling, institutionals. We have everything you need to research stocks and a full stop shop. Try it for 1 week for free. The link is below. If you want to get a 50% off for life, there's a code called LAST50. I'm going to put it below in the description, and you try it out and tell me what you think. And if you have any questions about Stock MVP, make sure to just DM me on Twitter with any question. I always answer every single one of you. And as always, don't forget to subscribe on your way out. Slap the like button. Hugs and kisses. See you next video.